IT consultancy company eClerx reported a strong showing in the second quarter. The company reported near 6% growth in dollar revenue terms sequentially, and the constant currency revenue was also higher by close to around 5.7% on a quarter-to-quarter basis. To help us out with what went on in the past quarter, Mr. Srinivasan, the CFO of eClerx, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in. Well, we haven't seen this sort of a solid growth. It was around 5.7% quarter to quarter in the last few years. Any one-offs? Is this number sustainable? And also, you've indicated that growth was aided by financial services growth. Could you tell us how much was that?
Thanks, Nigel, for having me on the show. So yes, this has been quite an exceptional quarter, and there were several short-term projects in both our financial services business and our customer operations business, which led to this growth. We don't specifically call out the contribution of each business, so I'll be unable to provide the detail or color on what financial services contribution was. But I think it was obviously stronger than the firm growth.
Well, it's good to see that there was strong growth. And as you're mentioning, there were some short-term projects that got executed. But is this sort of a momentum sustainable? And if you can't break up the growth for us, you could also give us an insight about how much financial services is, as a percentage of your total sales mix.
Financial services is about 40% of our total book. Mm-hmm. And in terms of growth momentum, whereas while I'm unable to comment on short-term changes in demand and short-term scenario, but the long-term outlook seems positive. So we are having a lot of conversations in financial services with clients. We're participating in a lot more. We're seeing a lot more deal activity. And even on the customer operations side, we're seeing significant activity. On the digital side of our business, I think there is some concern, especially with fashion and luxury.
Got it.
But other areas, the outlook seems to be improving.
And there has been a fair amount of growth in both fashion and luxury over the last couple of years, so maybe the base is extremely high as well, while there is prospects for growth coming in the financial services. Just a quick clarification before we move forward. You said that it obviously grew faster than the industry average. Could you give us a sense of perspective? How much faster? Was it 1.5 times? Was it 2 times? Just a rough, breakup, if you could.
So again, I will not be able to comment on that. I meant that it grew faster than firm average, not industry average. I don't have the industry numbers with me.
No, by firm average itself. I mean, we were just trying to take our chances out there. But also in the conference call, you did say that there were a couple of roll-offs which will show full impact in the third quarter. I presume roll-offs are orders which have slipped into the next quarter. So to that extent, does the second half look better than what has happened in the first half for you?
So roll-offs are projects for us. Roll-offs are projects that have ended. So there was
they have ended.
Short-term work that we were doing, and that has come to a planned end. And therefore, I think the point that we were trying to make is that we will have to sort of replace that revenue and find more work to be able to sustain the same amount of momentum, and which we think is going to be a little tougher.
So what is sustainable in that case, according to you? Because if you look at the trend, this quarter obviously was a lot higher because of these short-term contracts. A normalized 3-4% sort of number would be a lot more realistic?
Again, we don't give guidance either for the full year or for the next quarter. So I'll be unable to provide sort of any commentary on that or any color on that.
Okay. Srinivasan, in the previous year, I think your margins were in that vicinity of 28 to 30%. Then for this year, you have guided 24 to 28%, and you have achieved close to 27% in the past quarter. Do you think for the second half of the year as well, you'll be closer to the higher end of the range, which means for the year, you'll be closer to around the 28%?
So there are some one-offs in this quarter. If you look at Q1 plus Q2, which is, I think we are somewhere around the 25.1% mark, which is a little lower than the midpoint. So I think if things go well, that is probably where we would.
All right, around 25%.
So around 25.5% should be a fair estimate.
Possible.
All right. On the growth itself, you said that the second quarter had a fair amount of short-term contracts, etc. we had about 5.7% growth there on account of that. Could you quantify how much of this extra growth came in from short-term contracts?
Again, that's something that we don't call out specifically. So
we're trying our best to, just understand what is a normalized run rate out here and what happens. But
I'm trying my best not to reveal much.
We try to pace in and try to bowl the googlies, but it seems for now, at least,
he's either doing a well left or just defending it.
But we're not going to let you hit it out of the park. So let's get straight to another part of the business. So the street fears that AI could be a bit of a risk to your business. I wanted your comment on that.
So there will be some automation that happens in all the processes that we do, but we see it as more of an opportunity. So we offer several productized services as part of our operations portfolio, and many of our tools internally also use Gen AI and AI ML kind of technologies.
Got it.
And some of these have found favor with clients. So we see good traction there, and hopefully that part of the business for us will grow.
The good part about the second quarter numbers was that you said growth in North America was fairly strong while Europe remained challenging. But again, the question is, post-US election outcome, do you see more ordering coming in from the US, or maybe post-Trump regime, there could be some sort of risks? Just wanted to understand how this space pans out, specifically for your business.
We would, I think, wait and watch, because we are not sure whether what the commentary during campaign is, whether that will be implemented as part of policy.
But you have a precedent, right? You have a precedent. He was president earlier as well. So were there any challenges?
I don't think there were too many. On the supply side, the constraint on H1B could come up, but we don't use a lot of H1B, so that's not that much of an impact for us. Whereas on the demand side, if taxes go down, then obviously all companies will benefit. And we should see some pickup there.
Got it. Thanks a lot for that. Wishing you all the best. In this sort of a market, your stock is still holding up with a gain of around 2.3%. Tells you the street like those numbers, though, as you're clarifying. There were a couple of one-offs in the past quarter, though fairly confident about sustaining margins at around 25 to around 25.5%.